We move on now to the U.S., where the stock index futures pointed to a slightly higher open today as investors geared up for a slew of data announcements during trade, while keeping an eye on the central banking sphere. In data news, real gross domestic product is due out at 8:30 a.m. Eastern Time, along with jobless claims. Meanwhile, investors will likely be keeping a close eye on yields in the bond market as yields move higher. The numbers there are all in the green. Dow Jones Industrial Average up 0.68%, S&P 500 0.88% positive, Nasdaq tilting up 1.43%. In Asia, markets there traded higher today, taking cues from a stronger close in U.S. equities as traders ponder on comments from top central bankers overnight. Japan's Nikkei 225 rose 0.54%. South Korea's Kospi index opened at a record high and briefly crossed the 2,400 level earlier in the session, while the Kospi traded higher by 0.63%. In Australia, the ASX 200 was up 0.96% after reacting to gains in the energy, materials and information technology sub-indices. Markets in Greater China were also in the green, as Hong Kong's Hang Seng Index moved 0.86%. On the mainland, the Shanghai Composite edged higher by 0.32%, with the Shenzhen Composite Index advancing 0.62%. Back here and away from the market, in Rwanda, the host country of the ongoing AFREXIM 24th annual meeting is looking forward to more funding from the multilateral institution for its array of infrastructure projects. Acknowledging the past interventions of the bank in Rwanda, the Minister of Finance and Economic Planning, Claver Gatete, says the country is seeking funding for the expansion of its hospitality sector.
Our strong partnership and the role the bank has played in supporting our country's economic transformation. The bank has provided direct financing to Rwanda in the amount of $155 million in support of various development projects, including this convention center and the hotel across the road, the Radisson Hotel. So thank you very much. There are also other projects in the pipeline that are being considered for funding by the bank. I didn't want to give the amount because it's too big, and we expect that by the end of the conference there will be some signings and also conclusions on some of the projects.
In the meantime, the director in charge of the Africa Trade Expansion Program at the World Trade Center in Miami, United States, Kemi Arosanye, says it is time for Africa to start thinking beyond the Africa Growth and Opportunities Act due to expire in year 2025. Mrs. Arosanye was speaking at the annual meetings of the Africa Export-Import Bank in Kigali, Rwanda. The World Trade Center director says the AGOA program set up by the United States may be scrapped before the 2025 due date as America pursues trade protectionism under the new administration of President Donald Trump. Mrs. Arosanye says insufficient government support, lack of visibility and poor technical supports for small and medium exporters of goods out of Africa limits their access to developed markets. Last year, Africa's total exports to the United States under AGOA was a mere $9.4 billion, out of which 65% was crude oil and fuel products exported by Nigeria and Angola. Now, the U.S. Fed rate increase to about 1.25% from about 1% this month is not expected to have an overly negative impact on the Nigerian economy in the short term, as a report from research firm FSDH Group, which says the Nigerian fixed income market offers attractive yields that will pull foreign capital inflows and further strengthen the value of the local currency. The U.S. Fed rate hike decision was based on the realized and expected labor market conditions, as well as inflation rate in its economy. Multilateral institutions such as the International Monetary Fund had projected that emerging and developing countries, including Nigeria, are expected to be mainly affected by the hike. Following a positive economic outlook for Nigeria, FSDH Group says there has been renewed resurgence of foreign capital inflows into the economy. The analyst, however, explains that a negative shock to the level of oil production and oil price remain critical downside risks to the positive economic outlook. We'll take a quick break and we'll be back in a moment. Do stay with us.